Good afternoon, everyone. Today is March 31st, 2024. I'm Stephen Herwire. I'm the owner of Herwire Financial Plans with Direction. Today, after the market wrap, we're going to talk about how financial plans can save you money. It's not what you make, it's what you keep. The best way to make money is to avoid losing it. Thank you, Bernard Baruch. Financial plans are to help you avoid or mitigate the effect of the myriad of things that can be in your financial life. There is a cost, but there's also potential costs to not taking action. Today, we're going to talk about 3 real-life examples of the many where a financial plan either did save somebody money or could have had they had a financial plan. First thing people should know is just because it's in your will does not necessarily mean that's where stuff's going to go when you die, because many things have beneficiary designations: life insurance, your retirement accounts, annuities. If the beneficiary designation on any of these types of account is different than what's put in the will is going to be ignored in this case. I once had a client that came to me and explained that their ex-spouse had passed away. Even though the ex had remarried and started a new family and updated their wills, they hadn't changed their beneficiary on one of their 401ks. And the client that came to me was the beneficiary. The client asked how to get the money back to the ex's family. I indicated, even though I was an attorney, it was my understanding that in a case like this, the client was free to take the money from the old 401k. Client didn't feel right about this, and so I referred them to an attorney I knew could help with this sort of thing. One of the things I do in all my financial plans is I do a periodic beneficiary review to ensure that as circumstances change, that your wishes for things that pass outside the will, like I mentioned before, insurance, retirement plans, etc., go where you want them to when you pass away. And like to emphasize, in cases like this, if the will states something different, the will be ignored. Had this client's had this client not been so honorable, the decedent's family would have missed out. I was not informed of the actual amount, but this mistake could have cost the new family many thousands of dollars. Okay, qualified charitable distributions. These are, let me go through a few things so you can determine whether you need to listen more. Okay, if you're not older than 70 and a half, you can't do one of these. If you're not charitably minded, this is of no use to you. And if you don't have any tax deferred accounts, this is of no use to you. So I have I had a 73-year-old client who had not taken their required minimum distribution yet for the year. By the way, for those who don't know what an RMD is or the significance, when you put money into an IRA or a traditional 401k where you get a tax break when you put the money in, and when you reach a certain age, the uncle, the one that comes around every April 15th, is tired of waiting for his cut. So you're required to pull a certain amount of money out and pay taxes on it. Otherwise, there's a significant penalty. So in this case, this client, their custom was to take money out of the IRA and then donate it to the church. And what they do is they take the money out, put it in their checking account, and then write a check to the church. Because they didn't have enough deductions to itemize, it effectively was not, it gave them no tax benefit. However, I said to them, would you like to get some tax benefit out of this? And they said, sure, what do I got to do? So instead of having the check made payable to the client, he signed off on having the check made payable directly to the charitable institution. In this case, it was a church. Went straight there. And by the way, before we did this, we did consult with their tax preparer who agreed that this was a good idea. Okay, since they were in the 22% tax bracket for federal and 6% state tax bracket, they saved a little over $2,000, we estimate, in federal income taxes and about $550 in state income taxes, for total savings over $2,500. And it was just basically a few strokes of a pen that made that happen. Okay, Medicare. for anybody that's 65 or older or otherwise on Medicare, if you make too much money, they charge you surcharges for Medicare's Part B and D. Part of financial planning with me, we run your tax returns, we analyze them to see how close you are to many different brackets. Everybody's heard of, oh, I don't want to go into a higher tax bracket, but you know, if you only go a little bit into a higher tax bracket, it doesn't hurt as much as you might think. However, if you go even $1 over the threshold for Medicare surcharges, you can be stuck with that surcharge for up to 2 years. So I had a client who had worked a full year 1 year and was going to work another month into the next year and then retire. Well, they had a one-time small bit of or decent sized chunk of income coming to them for some other work they had done, and they had a choice whether to take it in December of the year where they worked the full year or January the following year. Well, again, doing an analysis of their tax returns, we figured out that it would probably boost them into a higher Medicare surcharge level. And our estimate was that about $1,500 a year, and that could have lasted for up to 2 years. So again, we consulted with their tax preparer, and they concurred, and they took the income in the year where they were only working a month. So this estimates save them between $1,500 to $3,000 based on this alone. So just to review, 3, and this is not by any means an extensive list. It's just the 3 examples I've encountered in my practice over the past 17 years. Beneficiary reviews, always beneficial because, you know, circumstances change and you may not want the stuff going where you originally set it out to. Qualified charitable distributions, again, got to be older than 70 and a half, got to be charitably minded, and you got to have a retirement account that is tax deferred, and avoiding Medicare surcharges. Unlike some other resolutions people make, which require ongoing work and discipline, the work part of the financial plan is at the front end. I still do most of the heavy lifting. After that, the planner does most of the work with periodic reviews with the client. And I've illustrated a few examples of costly mistakes that were discussed. But like I said, there's a plethora of other potential train wrecks that could be in your path. Similar to a pilot doing a pre-flight checklist, I use checklists to help me spot opportunities and potential problems for my clients during their financial voyage. It's very similar to what I did as a reactor operator on the USS Sturgeon. We had to do something called the pre-critical form checkoff, which is 60 some odd pages, as I recall. And it was to verify everything was good to go. Once you graduate, be it from welding school, engineering school, or law school, you're going to need a different plan for each of these stages that's tailored to each individual situation. In your working years, most important question to ask, am I saving enough to retire in a time and manner of my choosing? The sooner you ask that question and get the answer, the less impact it's going to have on your wallet. You also want to make sure you're kind of in the right area as far as investments. If you're invested too conservatively, it might be disastrous. When you're on the glide path to retirement, which I define as the last 10 years prior to retirement, you're basically asking, will the USS retirement be shipshape on the appointed day? We talk about things like Social Security and pension claiming and that sort of thing. And retirement. Big important questions retirement is, how do I avoid running out of money before I run out of life? And finally, legacy. Because when you're done with retirement, does what you worked hard for get to where you wanted it to after retirement? Can be reached at herwirefinancial.com. I do in-person, Zoom, and phone appointments. I am licensed and registered across several states and can easily add states if there is a need. If you'd like to schedule an appointment, click on the Schedule an Appointment button in the upper right-hand corner. Want to see more videos like this? Go to my website and click on the YouTube channel, which is that red button, a couple buttons over from the schedule an appointment button. Please like and follow me on Facebook, LinkedIn, Twitter, and YouTube. For those who prefer the good old-fashioned telephone, my phone number is 518-631-2569. Do not text that number. You will be sad. It won't get to me. There's a separate texting number right there. Opinions voiced in this material are for general information only, not intended to provide specific advice or recommendations for any individual. All performance reference is historical and is no guarantee of future results. All indices are unmanaged and may not be invested in directly. All data is believed to be from reliable sources. However, no representation is made as to its completeness or accuracy. None of this is to be construed as tax or legal advice. Consult your advisor prior to taking any action. Your results may vary. The hypothetical rates of return used do not reflect the deduction of fees and changes inherent to investing. Hey, everybody, have a terrific weekend. I'll see you next week.